Success is simply a matter of luck. Ask any failure. Ed Wilson. My friends, our success is predicated upon practicing 10 to 15 minutes a day, reviewing these charts, practice trading whenever we can, using our trade worksheet, daily market worksheet, weekly market worksheet. Again, today I will put at the end of the video the instructions on how to fill out all of those worksheets. You do the daily every day, you do the trade worksheet when you are practice trading all the way through a trade, and you do the weekly market worksheet at the close of the market on Friday after we record for you our weekly review and forecast. The worksheets are easy, they're free, they're available. All you have to do is subscribe to chartingwealth.com for free. You'll see the PDFs in your show notes every single day. You want to get good at this, you want to learn it. My friends, the way you do it, follow us every day. Take the trainings that are in your show notes. Great training today. It is using indicators to interpret crowd sentiment. That is exactly what we see when we have weekly vertical crossovers. They show you the sentiment changing when the crossover is up from fear to greed, and when things cross over going down from greed to fear. Now, let's jump into these charts and see what we have going on. By the way, Patreon supporters just sent out the 10 weekly vertical crossovers going up that we have identified for you, and 10 weekly vertical crossovers going down on the S&P 500. I will tell you that overall, when we were checking the market earlier, there were 17 ups and 30 downs. That's where things were about midday on the S&P. So take that list, go through it, find yourself some good practice trades. If you've taken the option training, which is available for free to our three-part series, available for free to our Patreon supporters at any of the 3 levels. The lowest is $30 a month, $1 a day to support us. We so appreciate that, and you will have plenty of training opportunities. The options training we have 3-part series is sent out to every Patreon member the minute that they join. Well, as soon as we get to your email, that's usually the exact same day. And don't forget, we did the monthly question and answer session this week. It just went out yesterday. So let's jump into these charts. We see all 4 of our charts, that is the S&P 500, the Nasdaq 100, 20-year bonds, and gold down. Gold down the most, hammering down 1.97%. Bitcoin up 1.8%. We'll talk about that. Let's jump first into the S&P 500, down 0.35%. Now, when you look, you see the price percent oscillator still pulling away from the red signal line. Derivative oscillator still green. We had a weekly vertical crossover back on the week ending the 21st of May. But then we have 2 weeks where the market has tried to push up and has pushed up a little higher. Today, down day, and look, we have this divergence. We see where price is moving higher, but the price percent oscillator is moving lower. What does that mean? Typically, that means that the price movement is going to fail. Let's look at where we are with the 2-day. Again, 2-day also has steadfastly refused to cross over going up. We have this latest 2-day candle is a red spinning top. It's a little bitty candle, not quite a doji, but not a doji. But what we see is some movement on the top, a lot of movement on the bottom. Derivative oscillator still negative. Price percent oscillator heading down a little bit. So are things failing on the S&P? Are they getting ready to really hammer down? Well, can't tell you that for sure, but when we look at all the down movement in the morning, bit of a recovery in the afternoon, so it was only down 0.35%. We did have what? We had that half-day crossover going down. We redrew that half-day trend line, so the 2-day and the half-day are just about laminated there. We'll continue to watch, see what there is to see, and how the S&P continues to perform. Now, one of the big downers today was the Nasdaq 100, down 1.04%. And you'll see why I moved the 2-day trend line up as I have done. We have an up week, of course, that has been forming, but same thing as the S&P. In fact, even more so, price percent oscillator refuses to cross over. Derivative oscillator gaining downward momentum. Price percent oscillator moving down. Look at what we had happen here with this latest 2-day chart. We had a bounce off. Looked like it was going to cross over heading to cross over going up, and then died and moved back over. So I went ahead and put in, I just moved up. I was tired of it being way back here. I went ahead and moved up the 2-day recross, and we see where, moved it from back here, which wasn't a 2-day recross, to a 2-day bounce off. We'll call it that. Red down candle that has formed, little wick on top, stronger wick on the bottom. Tried to redraw not much of a trend line, but nonetheless went ahead and put it in there for us. And that is where we are on the 2-day, half day. Again, I've gone not much of a trend line there either, but we can see where things spiked down in the morning, not as much in the afternoon, but that price percent oscillator spiking over on the half day, and the derivative oscillator hammering down. That's where we are on the Qs. Again, things just failing, refusing to move up. Hopefully, we're going to see that acceleration down. How many of you were watching for this bounce off? Did anybody think about jumping in as that pulled over? Again, not that you had to, not that you felt really safe about it, but it was a potential opportunity. Perhaps some of you are practice trading that just to see what you could learn from it. Again, it's all about learning. And when you get good, say you get good at long options, you get good at calls, and you want to learn how to short the market. What do? Do you just immediately start using real money after you've mastered one side of the market? Of course not. You will find yourself practice trading for the rest of your life as you learn new things, as the market changes and modifies, and you have to retool. That's what makes this so exciting. The market is always changing, and we do things that work until they don't. Then we learn new methods and new ways of doing things. So it always keeps you sharp. Now let's look at 20-year bonds. What's happening here? They were down a little bit for the day, but look at how the price percent oscillator continues to pull away from the red signal line, down 0.38%. What's the week looking like? Well, it's a little red spinning top there, almost a doji. We see the price percent oscillator still positive. Price percent oscillator pulling away from the red signal line. Derivative oscillator still positive, losing some momentum, but still momentum there. So very interesting to watch. We go to the 2-day. What do we see happening there? Again, 2-day still above the red signal line. Derivative oscillator gaining some momentum. Latest 2-day candle is a green spinning top. That's an open box green spinning top candle. Lots of upward movement there, a little bit of down movement. So it is interesting. As bonds want to stay positive and stocks want to stay negative in spite of movements in the opposite direction. Isn't that strange? Does that tell us that something might be coming down the pipe? Possibly. When we look at the half-day chart, we can see where bonds hit their low back last Tuesday, the 1st of, this Tuesday, I guess I'd say, the 1st of June. Things popped up through, Wednesday afternoon, and then rotating over, heading down on Thursday. Price percent oscillator pulling away from the red signal line. Derivative oscillator gaining downward momentum, but not hitting anywhere near that prior low from Tuesday morning. So we'll continue to watch and see as things shape up. But it is odd, and I pointed this out to you, this whole week, as we see, again, with the S&P and the Qs, up movement as far as price goes, but the derivative oscillator and the price percent oscillator continuing to accelerate down. And on bonds, the exact opposite. Bonds sliding more sideways, but again, trying to move up. Price percent oscillator, again, gaining some momentum. So very, very interesting. Lastly, before we get to Bitcoin, we'll go to gold. Gold really taking a hammer today, down almost 2%. Been talking to you about taking profits as we've moved through and seen this great price up movement. You don't have to sweat it much, even though it was down a little. Heck, your jumping in point on gold somewhere around the 166 mark. Still at where? Closed at 176. 166 to 176, that's $10 a share. That's not bad, is it, my friends? It's not bad at all. So again, make your calls, pay attention. I know that plenty of you have already taken profits in those practice trades. Look how that price percent oscillator lost a lot of momentum. Derivative oscillator, a little less than flat there, still positive. Look at this 2-day chart. Red spinning top, indecision tending down, popping quickly below that 2-day trend line, almost touching on the wick on the bottom of that candle, the weekly, but still well above that. Price percent oscillator heading down, derivative oscillator losing upward momentum. Now, you hadn't had that crossover yet, but maybe coming to that, may not. Gold may pop up tomorrow. Pay close attention. Look at how we had that down movement in the morning. Not as much, didn't go as low in the afternoon, but after that sideways sliding and moving up, it stayed negative, didn't it? And man, really kinked over. And on the price percent oscillator, derivative oscillator gaining downward momentum. Lastly, we'll go to Bitcoin. Bitcoin up for the day, the only up thing that we see, 1.80%. And again, Bitcoin hovering right there around, not going below that $36,600 or so mark. Price percent oscillator still going down. Derivative oscillator gaining downward momentum. 2-day chart, you can see where things have sort of hit that bottom and not gone below it. Green spinning top. Now that's a slowdown in the down movement. It's not an open box candle, and it's a small green candle. And we look at the half day. And again, half day crossed over, going up back on the 26th, Wednesday, the 26th of May. Went up for a couple of days and then down for a day and a half and then sort of sliding around, trying to move up again. Just because this half day chart is hammering around the bottom does not mean that Bitcoin is getting ready to fly up. It could, but again, just because you see some movement in that smaller chart. The 2-day, which again is starting to flatten, not going down as much on the price percent oscillator, and that weekly still heading down. But again, maybe we have a floor here on Bitcoin. We'll continue to watch and see. It's no time to start getting into a practice trade yet on Bitcoin, but pay attention. All the charts all the time. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters. Thank you so much for all of you who've purchased the book lately. God bless.